Hi, and welcome everyone to the Flow podcast, where we discuss the market structure in digital assets. My name is Konstantin Shulga. I'm the CEO and the co-founder of the leading crypto ECN and electronic trading SaaS provider. And today we're filming this new episode in Hong Kong, and we have our honored guest, Jack, who is the co-founder and the CEO of the Prime-brokerage LTP. So Jack, please.
Hi, I'm Jack, founder and CEO of LTP. We are a top prime broker in digital asset world, and we have served a lot of institutions from 20 countries and regions, and we provide market access, clearing, financing, and risk control for all the institutions.
Thank you. So it's really great to have you here today. And literally, we're filming this podcast the following day after the brilliant conference that you hosted yesterday with a few hundred institutional market players across buy side and sell side, as well as the regulatory bodies. And first of all, I want to congratulate you with the success of the event. And as the saying goes, the action without the vision is blind. So maybe you can share a bit more details. So how did you come up with the idea of actually hosting such event? And can you tell a bit more about that?
Okay. I think first of all, we want to expand our branding and reputation. And the others, we also see all the events held by the other partners, and we think there lack some event, some place we can bridge the companies from the east and from the west, and we want to connect with these two parts to get rid of some misunderstanding. Also, we think we must have an event focused on the institutional level service, bridge all the exchanges, prime broker, custodian, all the things together, and talk about how to improve the service from an institutional level. And we also we think our industry need to be regulated. We want to make a place can have the regulators come and share more details about the regulation, and all the companies can get the information, and we can talk about how to deal with the details. Because if you want to have a rules for all the industry, you must talk with the companies on the first level. So we need this event focus on the institutions, or talk about all the things.
And by the way, did you measure like how many attendees from how many countries actually attended the event?
I think for the numbers, maybe more than 1,400, and countries. It's hard to, we don't collect the countries, but I think around maybe 20 or 30.
Yeah, so well done. I guess the goals that you mentioned of like this connection, this is definitely important, because for me, as a marketplace, where we're running a marketplace, and I guess both the prime brokers and the ECNs tend to solve the same fragmentation issue, and it's great to see that you're solving that not only on the product side and the main business side, but also hosting such events. And once again, congrats on the success. So let's talk a bit more about your background and actually how we ended up here, not only doing this podcast, but running the business in the digital assets. So on my side, before I ventured into crypto, I had a background in traditional finance, which I was doing for 15 years, mostly in the electronic trading space within equities and FX. But on the other side, you've carved your way through quite an impressive career directly within the crypto industry. And also you began as the aircraft engineer, which is like quite an exciting career path. And then you've made this leap of faith and actually ventured into the digital asset space So how did you navigate this transition? And please tell us more a bit about your background and the story.
Okay. Yeah, I didn't come from the TradeFi. I came from the engineering space. My major is aeronautics and astronautics. And in my first 3 years of my career, I'm an aircraft designer. I think this experience also helped me a lot. It helped me how to deal with the security. Think security the first. Then how to address the project with the systematic method. I
and
think
the precision, I guess. Yeah.
it's very important when you deal with the aircraft designer. And why I came into crypto world is also very unique. I met cryptocurrency in 2017, and at that time a lot of ICOs, and when I came into some community, a lot of messages. I think what it is, it must be some
Let's use some polite word here.
yeah, it's must be some scam. And also at that time, the government told they banned the exchange or the crypto exchange in China, and I think it's also a scam. But when it go to 2018, a friend of mine, a trusted friend of mine, shared the Bitcoin white paper to me, and he said, you must need to read this. And I go through the pages, like 8 pages, and I came from the technology side. When I read all the pages, I think it's beautiful. Combine technology and finance together. It's just like some mathematics. It attracts me. I think this industry will have a bright future. And also at that time, China also have a lot of activities in crypto world. So I quit my job from aircraft design and jump into a crypto company named Token Insight. It's like a rating and research firm. The model is like APAC coin market cap. So we rated the tokens, exchange, and the funds.
Sounds great. So, well, exciting journey. And I totally agree that I guess the Bitcoin white paper actually did inspire a lot of the proper industry participants and industry players that sees that as something more than just an opportunity to gamble and earn some money. So this is basically the future of finance, and maybe not even like the finance, but the way how the people can easily interact between each other, which gives way more flavors to that. So now let's also talk about this transition. So you moved into the crypto space, you joined the token side, and I guess you were involved in a lot of activity analyzing the markets. And is that the moment when you kind of mentioned and realized how fragmented the markets are? And is that something that led you to starting LTP? So how did you came up with the idea of an LTP?
Thank you. When I start my career in Token Insight, we find there are a lot of misunderstanding between the investors and the fund managers in quant trading field. A lot of people, they raise money with the PPT or Excel or the fake numbers, and from a rating institution, we want to make this industry more transparent and more trustable. So we have a ranking list. We rated the fund with the historic performance, with the team background, with the risk control procedures. It's like the morning star in TradeFi. So we rated a lot of funds and make and we got the data from the read-only API, so it is real. and is it the third party, the data from third party. So the investors and the traders also believe in these numbers, and we almost rated more than 100 fund products and make it available to a lot of institutional investors. Then also we have I co-founded a fund of fund to invest the top tier funds, because we can find that which one is better, and it's also a good asset to be invested. Also, a lot of the other requirement or needs from the clients. Fundraising is just one element, and some fund manager, they want this because they just came in this field and don't have a lot of money to expand their AUM. So, but for the mature fund manager, they make a lot of money and they can easily get the money from the other investors. And we must have a trading infra for all the fund managers. They can get money from us. They can also benefit from our technology. All the things is done by a prime broker in TradeFi. So from our side, we originally have the idea why we can not have a digital asset prime broker. So in 2020, I shared this opinion to the other partners, and we talked, but we shared different opinions. I want to do the sales side business and serve all the different fund manager. The others, they want to do the fund manager, move this fund of fund to be a fund host by themselves. So I must to quit again and start this business. In 2021, we started LTP.
It's a great story, and I think this perfectly leads us to the next question, and basically the whole topic of the podcast and our series is the market structure. As you mentioned, the TradFi has all the important elements, like the prime brokers, the market structure is there, like the resources like Morningstar. All of that brings transparency into the industry. But when we look into the crypto space, it's an extremely new emerging space. And just over the last few years, we see some new market participants, like the prime brokers, like OTC venues or ECNs, and a lot of that changed, I guess, especially after FTX. So can you share your opinion on how exactly the industry changed, and what did you see on the market structural changes post FTX?
Okay. I think before FTX, the market structure is there is one single central, the exchanges. They play a lot of functions on their platform. They are the exchanges, custodian, prime brokers, banking, all the things hold in their platform, and it cannot be seen by the others. And after FTX crash, all the people in our industry saw the big risk. There are a lot of one single of failure risk, and we must move the other function out of the exchanges, move one single platform to a third-party supervised structure. We must separate the custodian, prime broker outside of the exchanges, because the custodian is the security layer, keep the funds safe, and it cannot be hosted by the exchange and prime broker. And from the prime broker level, it hosts all the positions. You cannot make the exchange know everyone's position when they do the match engine. And I think it happens today. A lot of long tail exchanges, they trade against their clients. So in so we must separate these two functions out of the exchanges. And so after crash, I think everyone know the risks, and we want to move the structure to the structure we have described.
Actually, you're just raising a few points that I remember just after the FTX events happened. A lot of our clients, partners, investors reached out, and actually we shared the vision, and I definitely agree that the main trend that started to happen after FTX and that will be happening within the next 2 or 3 years is debundling. It's exactly separation of the functions of the market making, clearing, financing, custody, and the execution part, which once again what Finery Markets is trying to solve, operating a non-custodial matching engine without any other functions, whether it's clearing. And for this function, we have the prime brokers. So maybe let's talk a bit more about the prime broker. So let's first define it. Like, what is a prime broker? What's its role within the current space?
I think if you call yourself a prime broker, you must address these things. First one is market access. You must make your client can access to different liquidity values. The second one is clearing. Your client may trade a lot of values, and maybe in some in crypto world, some in field world. You must make them can clearing as your service. The third one, you must do the risk control, because prime broker need to deal with the different counterparty risk as your level and provide a pure trading solution for your client. The fourth one is you must have some financing functions, lending or investment to make the client can improve the fund efficiency. And the others, maybe some technical service. I think a lot of companies call them prime. It may be just a tech level. For a prime broker, you must have the 4 functions I just mentioned.
And also, like on top of what you just mentioned, I think it is a really important thing to become like agnostic, to be the agnostic and market neutral provider, so that the clients can have free access based on their will and their ability.
And they need to get access to the original order book, and not an order book you have like done by yourself and you trade against your client. It's not a prime broker.
Yeah, I think this is quite important concept to be aware of the space. If you hear the term prime, basically these are the questions and these are the main points that anyone should ask their PB. So if they can tick all the boxes, then it seems they're operating with a proper PB.
Yeah.
So let's now talk a bit more about something that is being widely used and widely provided in the TradFi, but till recently in crypto, it really wasn't the case in the digital asset space, and I'm talking about the electronic OTC. So we just announced our partnership between LTP and Finery Markets at your event yesterday. So can you tell a bit more about how LTP came up with the idea of providing electronic access to OTC? How do you see the markets are changing so that we can address some of the new requests from the clients?
Yeah. Transparently, we are not the expert in the ECN market, and we got it from you, from some of the other ECN providers, and also we talked with some of our clients. When I talked with someone about the ECN, all the things is about counterparty risk, how to solve it. And when you trade on the exchanges, you must pre-fund of the of your fund to the exchanges, and most of the exchanges are not regulated in the crypto world right now. So if you are a regulated TradFi companies and you want to get access to crypto world, you have no place to trade. Also, when you do the liquid fund and you are concerned to put your fund on the exchange, you cannot trade. We must have a place to solve the counterparty risk completely, and also can get a better liquidity. I think we have seen all the ECM providers, and we think in this scenario we want to set up a completely post-settle and better liquidity trading value for the client, and with the cooperation between us.
Appreciate that, and we truly believe that the crypto is adjusting to the needs of institutional clients, and that's basically what inspired us to start Finery Markets at the first place. Because if you look at the traditional asset classes, I guess like most of the flows in the FX, institutional FX, is traded on ECNs. A lot of the flow in equities, especially US equities, are traded OTC and also via ECNs. So this is like a next logical evolutionary step with the debundling of the industry, migration from the single point of failure, as you mentioned in the beginning, where an exchange has everything all together with clearing, custody, financing, and execution, and sometimes market making, into like a proper debundled way, which eventually can not only improve the counterparty risk, as you mentioned, but also the liquidity. Because I guess for the market makers, for them, it's also a safer way to operate, since they also don't bear the same counterparty risk on some offshore unregulated venue. So yeah, we're quite excited to provide your clients with the access to like a fully electronic and safer way of OTC trading. And let's then talk about the fragmentation of the markets, because like OTC is also quite fragmented, but centralized exchanges, I think, even more fragmented. We right now have a few hundred exchanges. That means a few hundred completely separated central limit order books, even though the actual price discovery only happens, I guess, within a very limited number of venues. But we have all of this, like all of that long tail of the smaller exchanges. So how do you think the industry will be changing within the next few years, considering this fragmentation? Do you see more consolidation? And how do you see the centralized exchange space will be competing or will be positioned against the OTC and the ECN space?
Yeah, I think it's an interesting question. We are seeing that the exchanges more and more concentration in, but it will be divided to different regions. They have different users, different regulations, and that must have be separated. I think in the liquidity level, maybe we'll concentrate in some top exchanges, and for some vertical industry, and they maybe have some small long tail exchanges to meet the requirement from the client. So it will be fragmented to some level, maybe around 100 or 200. From our side, we don't think all the liquidity focus in one exchange is good. We must have the competition between the exchanges to make the client can choose. And we, as a role of prime broker, our function is to make the client can trade in one platform and got all the liquidity, and they can benefit from the liquidity. So we will connect with different regulated exchanges and make them can access to the liquidity clearing for them, and also do the risk control for them.
I also wanted to get back to some of the thoughts we shared back after the FTX events. Together with the debundling, we also were thinking what might be the main beneficiaries of the next few years. And I truly believe that the prime brokers are one of the main beneficiaries of what's happening in the market, because the market is extremely fragmented, and that model, the PB business, actually addresses the fragmentation. In the same way as like the ECNs, we also help address the fragmentation issue with connecting clients with multiple market makers and multiple participants. So talking about this fragmentation issues, and also back to the FTX, what do you think were the main misunderstandings by the professionals in the industry before the FTX? How did this entire industry change with the entry of the PBs?
Yeah, I think before FTX crash, everyone, maybe a lot of people, they think it's the number 2 exchanges. It's big enough to trust. In our industry, I think we cannot say too big to failure, and we cannot trust any companies that's not which is not transparent and not regulated. And for us, as a prime broker, before FTX is better to have. You have like better fees, lending, you can get a better P&L. But after this, everyone saw that you must have a layer to address all the counterparty risk. Because if you trade on like 10 or 15 exchanges, it's hard for you to address all the risk. And you must have someone to handle all the things and handle all the connectivities, and also do the cross margin between the different exchanges. The role of prime broker have improved a lot, from a better to have to must have.
Yeah, which I think, as the saying goes, what doesn't kills us makes us stronger. And I think that's exactly what happened around the FTX events. So yeah, it's great to see that the industry survived, and not only survived but became way stronger. So like there are a lot of the elements into the crypto space. So we've talked about the PBs, the OTC, ECNs, the centralized exchanges, but there's also like a major part which is on-chain, and this is DeFi. So how can you envision DeFi being part of the PB services at first? And what do you see as the overall role of the DeFi within the institutional trading space, especially considering the regulatory aspects?
Yeah, we came from crypto native, so we believe in DeFi in the future. And now, DeFi is not so mature for the institutional clients. From our side, we see a lot in the bar market, a lot of trading activities in DeFi, a lot of new tokens listed on the DeFi, and there are big opportunities if you can trade between CeFi and DeFi. Some of our clients, they do a lot of trade between these two markets and make money. And also, from prime broker, we can lend in between these two exchanges and help the client can manage the risk between these two very different type of values. And for the DeFi side, I believe in that DeFi also need a revolution. One is we need DeFi address the regulation side, regulation issues before the institutional client came in. Now that you can find the TVL is around 60 billion to like 50 billion. It is the power from the individuals.
Yeah, the crypto native.
Crypto native world, and all the regulated institutions cannot get in DeFi. And for DeFi, why we pro DeFi? We see a lot of efficiency improve when you address the trading, lending, asset management. You don't need to sign a lot of legal agreement. You don't need to trust in some companies, trust someone. You can have a place. You can trust the code. And like Uniswap, it has maybe not beyond 100 people, but the trading volume can beyond Coinbase someday. We need to separate it, DeFi to two parts. One is regulated DeFi. You must do the KYC AML, and you can have your business on DeFi protocol, and it can be all the institutional infrastructure need to be set up.
But this part right now, I guess it's quite tiny compared to the other DeFi.
I don't think it will be tiny, because if you can make the institutional.
I mean, right now, but
right now is very. Yeah, we don't have this two part. It's all the things together.
Yeah.
I believe in that. We need trustless. We don't need permissionless. For the maybe we can separate the two parts. Separate this industry to two parts. One is not permissionless but trustless. One is permissionless. So for the first one, the institutional they can come in before because you do all the regulated infrastructure. You know your counterparties, and you know your activities can be audited. And for the second part, is maybe more crypto, more crypto native. Everyone can get access and use all the functions. You don't need to do the KYC. It's like it also have some market. Some users want this kind of setting up. So two part.
Yeah. And I totally agree. I'm also a big fan, but mainly not on just the execution side of DeFi, but I think the largest implications that might completely change the whole capital markets industry should happen on the clearing and the post-trade side, because that's exactly where you can eliminate this counterparty risk, not just the counterparty risk, but the whole concept of trusting and entering into certain legal agreement that is not technically binding. So that's something that I think DeFi can solve and extremely improve the efficiency, which should also drive an additional revenue stream for the industry in the mid to long term. But we're not there yet. The industry is like less than 10 years old, and as a lot of the kids when they're young, like probably the same age, they are dreaming about going into space. But then 20 years from that, only a tiniest percentage of that are actually becoming like astronauts. And I think this might be the same analogy. So hopefully DeFi will kick off with better chances.
Yeah, I think it will. In my mind, maybe all the companies will move on chain. It's a DApp or a chain, and everyone accepts, and it will have different rules in different DAPP or chains. You can spread your product and service, and everything is transparent, trustable. Yeah, we do have a long distance from now to the the future, but we are seeing that the industry is the infra of this of DeFi become better and better.
Yeah, just need to solve the gas fees for ERC20, which right now are quite painful. But yeah, hopefully excited to see more great projects in the space. And now let's talk a bit more about your next milestones. So what is on the agenda? What is the hot topic for LTP within the next year or two? So we recently just launched our partnership on the ECN side, but I guess you have a lot of other projects in the pipeline. So what are your main focus areas?
Yeah, nowadays we focus. First one and the most important one is compliance. We are getting the license from Hong Kong and Dubai and BVI. We want to be a regulated prime broker. Second one, we want to be the bridge between the fiat world and crypto world. I think in the future, a lot of companies from the fiat world will come in, and also they are concerned about the liquidity between these two worlds. If they can come in and cannot come out, they will not come in. So the bridge must be strong and strong enough to maintain a bigger business. And we want to bridge these two worlds. So for us, we must improve the balance sheet, improve the bank relationship to make them can get in and out. The third one, and also it's our strength. We will reinforce our strengths from the product and tech side. We will developing our system with a high performance and reliable and also good functions to benefit our clients.
Sounds great. And one of the topics you mentioned on the on and off ramps, basically the fiat rails, this is beyond just trading. This is a massive impact of the crypto for the TradFi industry. I think this is one of the main use cases. This is also driving the industry as on the money remittance and the payment side, which making it quite efficient. So I guess for everyone that wants to do more, to cover more use cases in the space, this is a very important topic to address. So yeah, it's great to hear that from you guys as well.
Yeah, if we want to improve our industry to the next level, we must have more and more clients, both individual and institution, came in, and when they want to come, these things, the first issue they think how to address the fiat and crypto exchange, how to address the custodian, how to get rid of the counter risk. So you must have this strong infra, which is not enough to attract more and more clients.
So today we talked a lot about like all of the industry aspects, and just wrapping up our session, what do you think are the main quantitative flips for the industry for the mass adoption, both on the retail and institutional side? So what we are missing, what should be happening within the next years, and how do you see LTP's pivotal role in facilitating and advancing that process?
I think nowadays crypto have been a different asset class, and the people came in to invest and trade and get some opportunities. But on chain, we cannot just have crypto. We must have different assets on chain to make the users can benefit from the blockchain technology. So also when we're talking with the banks, they are thinking how to solve the issues from the RWA world, also how to tokenize different assets from off-chain to on-chain. I think from the new user, assets is the most attractive things. If one asset, the price improve a lot, also the performance is good and steady, I think it will get a lot of supporters from the client. So crypto, in the past 10 years, it have proved it's a very have a bright future new asset. And we cannot just have crypto. We must have the other asset came in, and maybe it can be composite together to make the investors can benefit from the technology. And for us, we will have some banks or some companies to they maybe can be the asset issuer, and we can help them to address the liquidity. We are good at all the liquidity issues, and we can make them can have a better liquidity to meet the requirement from the client, and they can also be distributed to different venues and can be accessed by different clients from different districts. We can also bridge the fiat world and crypto world to make the fund can come in and out freely. So that's the things we want to provide.
Sounds great. So yeah, I hope to see more assets traded on chain so that we can bring more efficiency to the space. I guess that's the end goal. All right. Well, Jack, thanks a lot for that pretty deep and insightful conversation. I think today we just helped our audience to know a bit more, not just the market structure in general, but the role of debundling and avoiding conflicts of interest. Whenever you are entering the digital asset space, you should identify like the proper market elements. And as I mentioned, I do believe that the prime broker is an extremely important element to the success of the entire industry. So it was great to have you here, and thank you. We'll see you in the next episodes.
Thank you. Best wishes to our corporation, and we can cooperate together to provide a better service to all the institutional clients.
Yeah, we'll bring the best practices. Thank you, Jack.